Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 22nd, 2025, and we're diving into RTX's Q2 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. RTX, the world's largest aerospace and defense company, has just released its second quarter results, showing significant growth in sales and profitability. I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. RTX reported sales of $21.6 billion for Q2 2025, marking a 9% increase from the previous year. John, what are the key drivers behind this growth?
The growth is primarily driven by strong performance in the commercial aftermarket and defense sectors. The commercial aftermarket saw a 16% increase, while defense sales also contributed significantly. This robust demand is reflected in their book-to-bill ratio of 1.86, indicating strong future sales.
And how about profitability?
RTX's adjusted EPS came in at 156, an 11% increase year over year, beating the analyst forecast of 145. This was supported by a 12% rise in adjusted net income to $2.1 billion, showcasing effective cost management and operational efficiencies across their segments.
Segment performance. Let's delve into the segment performances. How did Collins Aerospace, Pratt & Whitney, and Raytheon fare this quarter?
Collins Aerospace reported sales of $7.6 billion, up 9%, driven by a 13% increase in commercial aftermarket sales. Pratt & Whitney also saw a 12% increase in sales to $7.6 billion, despite a 4-week work stoppage. Raytheon reported $7 billion in sales, an 8% increase thanks to higher volumes in land and air defense systems.
It seems like each segment had its own set of challenges and successes.
Absolutely. While Collins Aerospace and Pratt & Whitney faced challenges like higher tariffs and work stoppages, they managed to offset these with strong aftermarket and defense sales. Raytheon's growth was bolstered by favorable program mixes and higher volumes.
Cash flow and capital returns. Moving on to cash flow, RTX reported an operating cash flow of $0.5 billion, but a free cash outflow of $0.1 billion. What factors contributed to this?
The free cash outflow was primarily due to capital expenditures and the impact of the work stoppage at Pratt & Whitney. Despite this, RTX returned $0.9 billion to shareholders and raised their quarterly dividend by 8%, reflecting confidence in their long-term cash generation capabilities.
That's a significant commitment to shareholders.
Indeed, it shows RTX's focus on maintaining shareholder value through dividends and strategic capital allocation, even amidst operational challenges.
Future outlook and strategic initiatives. Looking ahead, RTX has updated its full-year outlook. Can you walk us through their expectations?
RTX has increased its full-year sales outlook to $85.5 billion, reflecting strong first-half performance. However, they've slightly lowered their adjusted EPS guidance to $5.95, down from $6.15, due to anticipated impacts from tariffs and tax legislation changes.
And what about their strategic initiatives?
RTX is focused on driving growth in both commercial and defense markets. Their $236 billion backlog, including major awards for turbofan engines and missile defense capabilities, positions them well for long-term growth. They're also divesting non-core assets like Collins Simmons Precision Products to streamline operations.
Key takeaways. In summary, RTX has delivered a strong Q2 performance with notable sales growth and profitability improvements. Their strategic focus on core markets and shareholder returns is evident. John, any final thoughts on RTX as an investment?
RTX's robust backlog and strategic initiatives make it a compelling investment for those looking for exposure to the aerospace and defense sectors. Despite some headwinds, their operational strengths and market positioning are solid.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on RTX's performance in the comments below.